The downgrade by Moody's follows a similar assessment made by another ratings agency, Fitch. The international ratings agency last month downgraded Ghana's long-term foreign currency issuer default rating from B to B- with a negative outlook. The downgrade, it said, reflects the country's loss of access to international capital markets in the second half of 2021 following a pandemic-related surge in government debt. In justifying its downgrade of Ghana's long-term issuer and senior unsecured debt ratings from B3 to Caa1, Moody's projected that Ghana's debt ratios will continue to deteriorate in the next few years with extremely weak debt affordability significantly constraining policymaking. Moody's also estimates that Ghana's interest payments will absorb more than half the country's revenue over the foreseeable future, which is exceptionally high compared to peers at all rating levels. According to the 2022 budget, interest payments on government's domestic and external debt will amount to about 37.5 billion Ghana cedis, or about 37% of total revenue and grants expected in 2022. According to the ratings agency, even though government has announced a 20% cut in primary spending, equivalent to a 4% cut on a year-on-year basis or 16% in real terms, to compensate for any shortcoming in the government revenue measures package, such an unprecedented fiscal tightening will be socially, economically, and politically challenging to implement. Moreover, Moody says it factors in further fiscal pressure from interest payments in the short term, as the deterioration in funding conditions recently observed is unlikely to reverse until the government demonstrates to investors that significant fiscal consolidation is underway. Ultimately, Moody's expects that a higher interest bill in 2022 and 2023 will offset the improvement in the government's primary balance, thereby maintaining double-digit fiscal deficits with a concomitant increase in the government's debt burden. Moody's added that its stable outlook balances Ghana's significant fiscal challenges, large refinancing needs, and constraints on access to funding against the government's pre-pandemic track record of relatively effective policy delivery and maintenance of a variety of funding sources.